Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky. He's a Vancouver-based realtor online at SteveSaretsky.com. Welcome back to the show, Steve.
Yeah, looking forward to it. Thanks for having me on.
Steve, has the July issue of the Saretsky report been released yet?
Yeah, we should have that out probably in the next day or two. But yeah, as usual, kind of a deep dive, 15 to 20 page analysis on the Vancouver housing market. So yeah, should be out in a couple of days.
What's the latest on the Metro Vancouver housing market?
Yeah, it's kind of as I've been alluding to in previous shows here. That basically the housing market went through a pandemic-induced boom, and then ultimately peaked in March of this year. And since then we've seen a significant cooling in the housing market in terms of activity. But what we're also seeing here is a stark and significant slowdown in the number of new listings, and that's kind of keeping the housing market in check. So what we see basically is, in my opinion, it seems kind of rather simplistic to just point to it and say, it's all behaviors, but that's really what's driving the markets. We had the behaviors of people wanting more space, and now we have the behaviors of everybody being, largely vaccinated, going out, wanting to get out of the house, vacationing, camping, and so what we can see right now is there's been a huge drop-off this summer in activity, not only for sales, but for new listings. So, for example, if you're looking at detached homes in Greater Vancouver, we had new listings in the month of July, fall to the lowest levels in over 20 years. So basically what you've seen is just there's nobody listing their house for sale, and that's keeping inventory levels suppressed. And so we actually have the lowest, if you look at current inventory levels for detached homes in Greater Vancouver, they're sitting at their lowest levels in over 15 years. So basically we have a situation where the cupboards, so to speak, were plucked dry during this housing boom, and now we're going through this process of okay, let's sort of refill the inventory, and we're having problems doing that. And so as we look forward here, August is going to be another slow month in terms of listings and sales, and as we get back into our usual fall selling season, we are going to be starting from an extremely low base of inventory.
So is this a case of people want to buy a home, but they just can't find one?
Yeah, we definitely have an element of that. I would say in general, sales activities are down. Obviously, if you look at March of this year, it was all-time record sales. There's no way that you're going to be able to sustain that pace forever. So, naturally we're going from, it's like going on the highway and speeding, 120 kilometers an hour, and then all of a sudden applying the brake and you're going down to 100. So it feels rather like a significant slowdown, but you're still going really fast. So that's kind of where we're at right now is, we still have a lot of buyers out there that, have been looking that maybe weren't able to buy, and there really is no inventory to actually sell them right now. So that's kind of becoming a problem. And so I think as we open up here again, ramp up our housing market here in the fall, it's going to be another tight market for buyers, looking for homes.
What has that done to the prices?
Well, we've definitely seen like a leveling off in prices, more so for the detached townhouse segment. Keep in mind those prices went up 25 to 30% over the last year. And so that's what we've seen is the detached housing market, I would say ultimately peaked in terms of price in March. So, and now what you're seeing now, it's not necessarily reflecting in the MLS, benchmark that gets reported because it's kind of a lagging indicator. But what we can see is even in that benchmark, that prices have basically been flat on like month-over-month basis for a couple months now. Where you're actually seeing some acceleration is in the condo market. So I would argue that the condo market could very well outperform those other two segments, in the months ahead.
What's going on with condo prices?
Condo prices, again, keep in mind that, the markets can be highly segmented. So right now, Greater Vancouver condo prices are up 8% from last year. Obviously, significant lag compared to the rest of the market. But, you've got suburban condo prices, which I would argue are doing much better than example as being, downtown condos. Those are still the laggard. I mean, one of the things that I sort of pointed out here was, if you look at, for example, the best, in my opinion, the best value buy would be a 2-bedroom condo downtown. I mean, those are still down 7% from last year. So you've got a situation where a lot of the market's up 10, 15, 20, 30%, and then you've got this segment of the market that's still down, 7%. So massive divergence there, which will be kind of interesting to see how that plays out moving forward.
Are the mortgage markets and bond market important indicators for the real estate market?
Yeah, I mean, I definitely watch them closely. I think everybody's well aware that, low interest rates, low mortgage rates are underpinning, the housing boom, right? I mean, we've got a lot of leverage, obviously extremely high house prices. So, the housing market has become extremely sensitive to movements in the interest rates, obviously. And so, we obviously, I watch the bond market and central bank policy extremely closely. Again, I would argue that you don't really have a free market you don't have a free market in terms of setting interest rates. Central banks are obviously mopping up the majority of the bond market and suppressing yields. And again, I don't really see any reason to think that they're going to have a sudden change of heart, but, we'll see. Mortgage rates right now are still extremely low, and the catalyst for an actual real correction in the housing market is obviously meaningfully higher, borrowing costs. But again, I mean, my personal view is I don't see that happening anytime soon.
Do you have a bullish case and a bearish case for housing sales and prices for the rest of the year?
I mean, I don't really have any forecast, to be honest. I don't have any price, hey, it's going to be up 10 or 11%. I mean, my view is that could you see a correction in, detached or townhouse, product in the suburbs where it went up 25 to 30%? Could I see that correcting, 5 to 10% over the next 12 months? To me, in my opinion, that wouldn't surprise me. Probably would be healthy in the long run after seeing that huge run up. Again, I don't know what I'd put the probabilities of that at, but I mean, it wouldn't surprise me. But as it stands right now, if you look at inventory levels, again, you've got less than 2 months of supply on the market. So it's like, you're just not going to see a price correction, a sustained price correction, if you only have 2 months of supply in the market. It just won't happen. So it's going to either take a significant increase in the number of new listings over the next 3, 4, 5 months, or a significant decline in home sales. So it's kind of got to be one or the other, and we haven't seen that yet. In terms of the bullish case, it would simply just be, sustained lower rates, more QE from our central bankers, more immigration coming in, and seeing, I don't know, I think it's hard to see further increases in the detached and townhouse segments just because they've run up so much. But I wouldn't be surprised to see condos, play some catch up here and gap higher.
Are properties still selling significantly over the asking price?
No, I think that FOMO is kind of out of the market, which is kind of what I was alluding to. You have sort of that blow off top in March of this year where, if you look at it from sort of the January through to March or April, you had really rampant house price inflation, just record low inventory levels, and people desperate for housing, and that's when you're seeing 8, 9, 10 offers on a house, and people driving these things up several $100,000 over the asking price and pushing prices to really insane prices. And so now we've seen that sort of panic or that fear of missing out is now out of the market, and that's kind of leading to buyers to sort of make more calculated decisions in terms of their offer prices.
We'll have more with Steve Saretsky right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, is the unvaccinated versus vaccinated narrative, along with the Delta variant scare, having any effect on the real estate market?
No, I wouldn't say so at all. I mean, tend to keep the politics out of it. I mean, I don't think the housing market really cares, to be honest, a whole lot about that. I mean, there's nobody that's afraid to list their house. There's nobody that's afraid to not go and view houses. I mean, we've seen that throughout the entirety of the pandemic. I mean, after restrictions eased up in May of last year, I mean, the housing market for the most part took off, and so it's been the same. I mean, I'm not really paying too close of attention to that. I think a lot of it is political, unfortunately, and I think a lot of it is noise.
Are more foreign owners on the sell side now?
No, I haven't seen them playing a significant role in the housing market since probably 2016-17. I mean, what we've seen here is immigration, for example, has basically been, well, I would say pause, but you don't really have international travel. So, it's been a locally driven housing market this time around, which I understand for a lot of people is probably hard to believe because they think, well, how can you sustain these prices without, offshore money coming in? The banks are happily lending. We've got mortgage credit growing around 8%, which I believe is the highest in over a decade. So, the banks are lending money. It's a much less speculative housing market. And again, people say, well, how can it be speculative? How can it not be speculative? Look at the prices. Well, what I tend to look at as one of the indicators is the number of homes that have, bought and resold within a 2-year period, for example. So basically, you could argue that someone that buys a house and then resells it in 18 months, good chances they're just speculating, they're flipping houses for profits, maybe not necessarily to live in, but to make a quick buck. And so what we can see, this time around, for example, is we can see that, the number of the percentage of homes that have sold, the percentage of homes that have been bought and resold within a 24-month period, they made up just 5% of sales, in this cycle. So just, 5%. So 5% of sales, were bought and resold, within a 24-month window. You contrast that to, 2016, which was our last sort of housing cycle that we had. The percentage of homes that were bought and resold within a 24-month period was 14.6%. So almost triple what we had in this cycle. Now, if I look into 2007, which again, if everybody remembers, that was sort of the last housing cycle before 2016, which was leading up to the global financial crisis. So in 2007, we reached a high of 17%. So, you've got 17% in 2007, you've got about 15% here in 2016, and 5% today, and that number is now declining. So, again, in my view, it doesn't indicate a market that people are purchasing simply to buy and flip homes. It was a pandemic-driven, hey, we're working at home. Our kids are now studying at home too. Everybody's spending 90% of their time at home. We need more space. Let's move to the suburbs and buy a bigger house. that's been the primary driver of the housing market.
Are more people continuing to move out of the city?
So that's a hard thing to track. I mean, what I can say is that, the condo markets or even the detached, like the actual housing market in the inner city of Vancouver is actually performing very strong. The only market which, as I mentioned earlier at the onset of the show, is like you still have a downtown condo market, which has not quite recovered. Again, prices are still lower than they were 12 months ago. But what we're seeing, discussions with property managers looking at the rental market is you've got rental demand that is back in a significant way. What was once a discount in rents and, longer vacancy periods is what we're seeing now is that we're actually seeing a lot of tightness in the downtown rental market. We're seeing situations of renters actually competing for spots, and you're seeing a complete firming up here in the overall rent prices downtown. So that's kind of interesting, which kind of indicates to me that more and more people are moving back into the downtown core.
Steve, how can people get in touch with you, and how can they get the latest issue of the Saretsky report?
Yeah, best bet is just to go on my website, stevesaretsky.com. You can access the report there. It's all free. It's sort of a labor of love, so to speak. But and then best way to contact me is usually by email. It's steve@stevesaretsky.com.
My guest has been Steve Saretsky. Thank you so much for being on the show. If you have any questions for Steve, you can send them to info@howstreet.com, and we'll ask that question for you. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.